Right. This is a panel discussion on the retail sector, and it's going to be co-chaired by two of my colleagues here in the Economist Intelligence Unit, by Dr. Qian, who is Deputy Director of our China Forecasting Service. Qian is an expert on econometric analysis and economic analysis, not just of China overall, but also of cities and provinces within China. And the service of which she's Deputy Director generates the forecasts that we produce for 287 cities across China. She also leads our key industrial forecasts of the Chinese economy and undertakes quite a lot of modelling and bespoke research projects on the Chinese economy for a number of our clients who are interested in operating here. She has a PhD in economics from the University of Uppsala in Sweden, and also spent a year as a visiting researcher at the University of California in Berkeley. So she's one of the two chairs that we have this morning. The second chair is John Copestake. He joins me here from our UK office. John is the Economist Intelligence Unit's Chief Retail and Consumer Goods Analyst. He's also the editor of the Worldwide Cost of Living and Livability Surveys. In that regard, he has an extremely high media profile, probably undertakes more media interviews than anyone else at the Economist Intelligence Unit, particularly around his livability rankings. He's also regularly quoted in the trade press around his forecast for the retail and consumer goods sectors. So if Qian and John could join me on stage and then introduce their panellists for the discussion on the retail sector.
Hi there, everyone. First of all, a big thank you for attending today's panel discussion. I'm sure this is going to be a lot more exciting than the healthcare one, so those who left are going to miss quite a good show. We're very privileged to have two extremely high-profile and high-value panelists on the panel today. Tino Zeiske is currently the Vice President for International Affairs at Metro Group. He's held that position since January last year, but he's worked for Metro for the last 13 years and has been in China for even longer. He's worked for Hyper-Versbank in Shanghai since 1995 and also studied as a postgraduate at Shanghai Fudan University. Next to Tino, we have Stefan. He's the Head of Strategy and Business Development in the China region for Nestlé, the world's largest food company, just in case you didn't know. Stefan has also been with Nestlé for 13 years, but he's worked primarily in Switzerland, Germany, and Australia, so he's been all around the world before taking up his current role in China last year. So if you'd both like to come up on stage. So today, we'll start off with a quick 5-minute presentation from myself and then from Louise on some of the key global and then Louise specifically Chinese trends underway. And then we'll give Tino and Bernie a chance to share their thoughts on the retail and consumer goods sector. And then after that, we'll open up questions to the floor, and then we'll finish off with a summing up. But please do ask questions. This is a nice, small, intimate panel that we can really get some high value add if people are to ask questions of any of the panelists, including myself and Louise. So just to start my presentation. Here we go. So from a retail perspective, as with many other sectors, the economic crisis of 2008 marked a real turning point in geopolitics and geoeconomics. Not only did it expose the weaknesses in European and American financial markets, but it highlighted a shift in power away from mature retail markets towards much more dynamic growth opportunities in the emerging world. As a result, for the next 10 years, Latin America, Asia, and emerging markets in Africa and the Middle East are going to drive global retail growth. And the influence of North America and Western European markets is going to decline. But geographically, people are looking very much at some specific areas. So, as Robin points out, BRIC is described very much as being very much last year. It is still home to some of the biggest growing markets. The key here is that although there's been a slowdown in growth in Brazil and in Russia, many are looking towards India to take up the slack there. India's a very, very interesting market largely because of the opening up of the sector to single brand and multi-brand retail for foreign investors. The legislation is unpopular, and it comes with a number of clauses which are going to make growth difficult for global retailers. But Walmart have already taken steps to take multi-brand investment there, and specialists like H&M and IKEA are also investing in single-brand operations. The process for Walmart so far has been slow, but the price is too tempting to ignore. Within a decade, the Indian retail market could rival that of the European Union in terms of size. However, this isn't a great surprise. I'll talk about China later. You can see the China stat there. But the real big question for many is where next. And as Robin also pointed out, and Pat pointed out in her presentation, Africa is seen as really the greatest opportunity for longer-term growth in the retail and consumer goods sectors. This could be the powerhouse of the future. Despite problems with stability, crime, infrastructure, and corruption, so all of these hampering aspects, there is a large degree of fragmentation in the markets. There's a high thirst for Western brands, and this is really like tapping into the long-term potential that these markets can have. A UK survey earlier this year saw a quarter of retailers interviewed seeing Africa as the fastest growing retail market over the next decade. And over half of those who saw Africa as the fastest growing, South Africa was the key market for them. Unilever, Nestlé, Danone, they've already invested heavily in their African operations. And by 2030, the EIU are forecasting that the top 18 cities in Africa could have a combined spending power of $1.3 trillion US. Now, Africa's already been the focus of some M&A activity. Massmart was acquired by Walmart recently. This could provide a real blueprint for retailers who are moving into the region in a buy-and-hold fashion. 90% of Massmart's revenue does come from South Africa, but it has a presence in 11 other sub-Saharan African countries. And that's the area that Walmart and other retailers are going to be looking to tap into, is investing into a firm in South Africa and then using that as a springboard into the continent. But we're here to talk about China. So if we talk specifically about the Chinese retail sector, this year China is expected to complete a hat trick. It's going to become the world's largest grocery market, the world's largest luxury goods market, and also the world's largest e-commerce market. We can actually add a fourth indicator to that. China is also expected to spend more on retail abroad than any other country this year. It was second to the US in 2012. Now, we're also forecasting that the growth in the market combined with stagnation or relative stagnation in the United States means that China will overtake the United States as the world's largest retail market by 2016. That's ahead of the 2020 time when China will become the world's largest economy as well. By 2022, in nearly 10 years' time, we expect that China will account for a quarter of global retail sales in the 60 markets that our product covers. This has obviously attracted plenty of attention from foreign retailers. The big four, Walmart, Carrefour, Metro, and Tesco, have all invested heavily in the Chinese market, and they've been joined specifically by specialists in the luxury brand sector. So firms like Burberry, PPR, and LVMH have all invested very heavily in China as well. In China, the real, in my view, the real opportunity is more in the nascent online sector. And the fact that there's these domestic e-commerce firms which are growing. Online sales last year in China jumped by almost 65% to $200 billion US. But they account for about 6.3% of total retail sales in China, which is comparable with many Western markets. With this in mind, online is expected to be the most dynamic area of investment for China. And Walmart and eBay have both entered the market by buying into local firms. And they're looking to really compete with these domestic giants of Alibaba and 360buy, who are also expanding aggressively, not just in China, but are looking to expand abroad. Alibaba recently bought a huge stake in Sina Weibo as well, which shows that they're looking into S-commerce and other sectors. If we look quickly at the consumer goods sector, China has undergone or is undergoing a transition from being a global manufacturer to a demand-led consumer economy. And this means that China is expected to lead the way in growth for a range of FMCG categories. We teamed up with Mintel earlier this year to look at nominal expenditure growth across a number of markets, including China. There were 7 markets covered. Unsurprisingly, China was leading the way for all of the categories that we surveyed, except one. So, we're looking at particularly drinks and prepared foods are going to be really strong performers in China over the next 5 years. This is expected to continue because of rising wages in China and disposable income, particularly among rural consumers and in third and fourth tier cities on the interior, which are expected to drive growth as well. However, despite all this positivity, it's probably best to also hedge my bets. There are some pitfalls associated with China. A lot of companies are investing very heavily in China, and the expectation seems to be that if you just invest in China, then you will grow. This isn't really always the case. Retail growth this year is expected to slow for the first time to below 8%. And also we're seeing some mixed reporting from luxury goods firms in particular. There's been a slowdown in some key Chinese markets. There's obviously some government pressure on luxury purchases, which is causing some scrutiny there. And so there are a number of pitfalls here that companies need to be aware of. Best Buy and Home Depot have exited the Chinese market. And also, it's worth remembering it's not just international companies that may fall foul here. Gourmet have also seen that they've also announced recent losses, and that's showing that even domestic firms can struggle in the market. So now I'll pass on to Louise. Louise can look at some of the more detailed China regions.
Thank you, John. Right, so let's take a closer look at China. I will start my talk by giving you my favorite charts in the world, at least on China. Now, this is what China, when people think about China, usually words like cheap labor, made in China, sweatshops, things like this. But I'm going to argue that China has changed big time. And the way you should be looking at China right now is this chart. That you see this happy mouth showing up with tons of US dollars, buying up the rest of the world. So, one of the key themes for today's conference is China's overseas investment. But with this chart, I would like to add that China is not just having this huge consumer power to the rest of the world, but very importantly, China has this huge domestic consumption power. If anything, a lot of the FDIs coming into China nowadays are not really coming here to take advantage of the cheap labor itself per se, but rather they are here for the huge potential domestic consumer power. Now, one of the best examples would be Unilever. I don't know if we have anyone from Unilever today, but they set up one of their largest global manufacturing hubs in the inland province of Anhui in the year 2003. Now, guess what? Out of their entire output, only 10 to 15% of that is for export. And all the rest, close to 90% of their total production, is actually for domestic Chinese consumption. So please remember this chart. If you forget what I'll say later, but really China is changing. So retail sales, the domestic private consumption story would be the new key theme for China. And why are we so confident? I'm going to argue that there are two main reasons for this. One is the urbanization story. The other one is fast rising income. Now let's start by looking at urbanization. Already in 2011, we saw that the urbanization rate passed through 50%. Now that's huge if you think about how many people there are in China. And as at EIU, we are doing a very detailed analysis on the urbanization, the intra-provincial migrations as well. And we believe that in the next 10 years' time, there will be more than 100 million people moving from the rural area to the urban area. Now, this is one of the studies we have done. We call it the megalopolises, which is defined as the metro area that have at least 10 million people. Just to give you a benchmark, now both London and New York have less than 10 million people. Okay. Now we believe that by 2020 there will be 13 megalopolises, so big cities or city clusters that would have even the metropolitan population that would be more than 10 million people. If you look at them quickly, you can see that some of these regions, their population growth in the urban area or the metropolitan area have been growing extremely fast, close to double-digit growth. And we believe that although it will be slower than before, but this will continue to be a strong push for the urbanization. And now this is becoming even more important now that the new Chinese premier is calling for the fast pace of urbanization. If we take a closer look, right now, there are only 3 megalopolises in China, and you know them well. There's the Beijing, there's the Shandong Peninsula, and there's the Greater Shanghai. So all the famous places you know already. But by 2020, so in less than 7 years' time already, apart from them, you're going to see all these inland regions. We're talking about Hefei, Wuhan, Changzhutan, and this is my favorite part. So these are the triangle cities. We call them the Greater Xi'an, Chengdu, which is in Sichuan where the earthquake happened and where the pandas are, and then Chongqing. So they sit perfectly in the heart of China. They shape this perfect triangle. They're in the inland and western regions of China where there are fast pace of urbanization, and the GDP growth there are one of the fastest place in China. So this is really where you need to be looking at China, apart from just, as we talked earlier, Beijing, Shanghai, and Shandong, all the coastal regions, really. Another reason why we're so confident about the retail sectors is that fast growth of income. Now, we've seen that the wages, for instance, it's been growing on average 15% a year in the past several years. Now, the new government target would be to double the GDP and people's income by 2020. That's not going to be difficult at all. But I'm going to argue that instead of just looking at the average disposable income, which you saw from Robin's chart earlier today, we need to be talking about the income inequalities, the detailed income distributions as well. Now, in this chart, you can see I have put out 4 different cities. Now, they are at completely different development stage in China, and they sit perfectly in different locations in China. In 2010, their average disposable income were almost identical. We're talking about like, $5 difference or so. But if you break them down and look at it more carefully, you can see that for the lowest 20% versus the toppest 20%. And if you look at the comparison ratio of these 4 cities, even though their average disposable income were identical, the actual rich people and poor people in these different regions are quite different. So that's when we want to talk about retail sales. Overall, yes, it's all a great picture. But if you really want to drill it down, you got to have to look at different target audience, people with different kind of incomes and people in different age groups. Given the time, I will quickly skip the second part, but the idea is for you to see how quickly the second-tier cities are catching up with the first-tier cities. You can see how Suzhou and Chongqing are quickly catching up with Beijing and Shanghai. Now, 10 years ago, it was almost minimum, and right now, they're almost the same size, especially for the mid-income story. So as China becomes more and more of a mid-income country, the income story, the private consumption story would start to be more and more critical. Now, to conclude, I'm going to show you this chart. Call it Let's Go Shopping. Basically, I'm comparing China with so many different countries, including developed and developing countries. The idea is that you can see as a country develop faster and people become richer, so you're moving from the left-hand side to the right-hand side. It's very easy to see that the retail story, the private consumption story, will be more and more important. And China, if anything, is still very much at the beginning. So for China, there's still quite a long way to go when it comes to private consumption and retail story. I'll leave it there. Thank you.
So now, if I could just hand over to Tino to see what he thinks are the crucial points in China as a retailer operating here.
Well, I hope everyone can hear me. I think the retail industry in China has come a long way. When I came to live in China in the first time in 1987, actually, it was about a wet market. It was about a little bit specialized small retailers, which of course were state-owned. And of course, there was the shop where only the foreigners could buy with foreign exchange certificates. That was the landscape of China like 25 years ago. And today, I think all of us are consumers in China. We know that everything what the retail worldwide has to offer is existing in China. But this morning, Robin told us the best is yet to come. And you know what? I agree to that statement. Because I think we have heard a lot in the morning, and just now also from my two colleagues here, there is a lot of evidence of the political and macroeconomic setup for China, which would justify a conclusion to say, we have gone far, but the best is yet to come. And of course, the two major drivers, doubling the income in major areas of first and second tier cities is one thing, as well as the government move to support urbanization and to bring in infrastructure, not only in terms of roads and transportation, but also in terms of capabilities for example, maintaining food safety and food security. All of this, I think, is giving retailers a perfect platform to perform in China. But of course, and that's also the metro experience, there are a lot of things to consider. It is not an easy market. It brings a lot of challenges to retailers. We started here as Metro Cash and Carry in 1996, and today we operate 64 what we call wholesale centers. Some of you might know that more than half of our business is pure B2B professional business, and we are closely linked to the catering industry and to the small resellers. And by saying so, I want to really emphasize that not only the private consumption patterns are impacting our business, but also the general quality of products, the safety, and the infrastructure of the retail landscape in this country. So for Metro, with 64, we are not the biggest player, and some of our competitors, they have a much larger network. But what we have learned, for example, is it makes sense to focus on certain areas, like we have just heard from Louise, where the money is and where the customer is ready to accept our offers. This is something which we learned over time. And I believe going forward with the view of the best is yet to come, the platform for retailers will also be to take advantage of what I call the network densification. Not to spread around randomly, but to be clear where the development and the income distribution will take place, and position yourself in this kind of setup. So for me, China is a very complex place, and I guess that we still have time during our discussion to highlight the one or the other challenge and opportunity. But I would like to give a positive statement from a retail perspective to say, no matter what we can expect in Africa or in other parts of the world, at this moment, China is the place to be.
And Bernie, I was wondering if you had anything to add to that?
Yeah, well, today is maybe one of the rare occasions that a retailer and a supplier are 100% aligned and absolutely share the same opinion. I truly believe the best is yet to come for this market. I think what we saw this morning is really important for a company like Nestlé. Yes, we have been like Metro in China for many, many years. We basically first entered at the beginning of the 20th century, moved our head office here in the 1990s. But I think what's really important for us to say here is, for us, China is a local business. 98% of the products we do sell in China are produced in China, and they're produced for China. And that, for us, hearing that income levels will double by 2020, we're going to see more urbanization, we're going to see more of these mega cities. That's very good news, very positive news for us. So I think when you look at the overall macroeconomic trends, that all looks great. But I think importantly, as Tino said, there's a lot of challenges for companies in China. And you could also argue maybe we have too many Westerners here up on the podium today. Because if you look at the retail landscape and, importantly, the manufacturer landscape, the big companies very often are Chinese companies. They are very successful. They absolutely know what to do. And very often they've got one huge advantage that we as a Western company, even being the largest food company in the world, will never be able to overcome, which is local insights. And when you look at Nestlé, till a few years ago, we were, yes, a big food company in China, but really we were an international big food company. And only about 2 years ago, we entered 2 big joint ventures with local companies. Actually, one of the products you find on your desk today in this little box, which is one of these sweet candies, which is from a company called Su Fuji. which is a confectionery company. You will not find any Nestlé mentioning on that. And you will find products that we as Nestlé would never ever launch in any other country because we are not, maybe not smart enough might be too harsh, but we just wouldn't think about creative ways like that. But also we don't understand the Chinese consumer, we don't understand the insights. And so we became a much more Chinese business today. More than 2/3 of our sales in the China region come from local companies. Yes, we are the majority shareholder, but really importantly, these are local businesses. Local brands, importantly local management, but I think very important, local innovation as well. And these are things that we as foreigners couldn't do. And that's why I think when you see China as a market in itself and not as a production platform, it's going to have some fantastic years ahead.
Thank you. I can promise that that was a complete coincidence as well about Nestlé's packaging being in our goods, so that's a happy coincidence. I mean, before we open up to the floor, I'd just like to ask one particular question that you touched upon, and that is, you talk about the fact that China's been becoming more investor-friendly in terms of regulation and food safety and those aspects. But in a sense, also some firms have fallen afoul of that. It's actually been a worry for some Western firms in China, the degree of regulation and scrutiny that sometimes they come under. I mean, do you see China's growing regulatory environment as being a big plus or a challenge for your company to operate in China?
Well, I would say that indeed the regulations, they seem to fit. The problem in China is mostly about execution and enforcement. And here we do see still very many challenges. I think all of us know about the latest scandals, the fake products, the crisis which retailers and suppliers have to go through here in this country. What I think is important for retailers is to understand that other than in your home market, in China you might want to or you might need to go one step back in the supply chain with your own engagement in order to get greater control over the supply chain. Metro has in 2007 invested in a small company which is called Star Farm in order to help the producers in the agricultural field to live up to standards of European food products in China. Metro, I think, was the first company who introduced their own exclusive brands in the food business. We have own brand water, we produce own brand rice, other grocery products, which is, of course, a very big risk in itself when you produce and sell in a market like China. So we had to take control of the whole supply chain, make sure that those products, they come with the same international food standards like we sell them in Europe. And it was a success so far. Numbers show that customers are accepting it, and actually the failure rate, which we monitor very closely, is extremely small. But it remains a daily challenge, and I'm just highlighting this as an example for retailers in China doing maybe things slightly differently from what they have been doing in their home markets.
Well, I can only support that. For us also, I would argue food safety is and remains the number one priority, the number one challenge. And I think very much like Tino just said for Metro, also for us, it's really controlling your supply chain. When we look in the northern provinces, in the milk district, we have been collecting milk for a long time, and you all know about the issues with milk, the scandals in the last 5 to 10 years. So that's very important for us. So we created what we call the Nestlé Dairy Farming Institute, which is an institute where we train over 10,000 farmers every year to make dairy farming more efficient. Because I think we also need to remember it's about creating the shared value, and we need to ensure that farmers locally make enough money that being in dairy farming is worthwhile for them. And I think that will be done in more areas. Milk is an obvious one for Nestlé. We do something with coffee in the Yunnan province. But we only realize now, as I said, with these big joint ventures, that there are other products that we need to ensure supply chain quality. For example, in one of the factories, we use 1 million fresh eggs every day. And suddenly you start to realize, well, actually, we know very little about eggs. So how can we get knowledge? How can we ensure that we really control our supply chain upstream to do the right thing? And that's why, maybe how you can ensure food safety the best way. And I think food safety, maybe to add on that, regulation is in place. I think enforcement is the big issue. And then one other big issue we see is, I think, also a trust issue for the Chinese consumer. that many of the consumers don't trust local brands. And a good example of that is, and we all read about that in the last few weeks or months, about infant formula products. Hong Kong just introduced the ban of exporting more than 2 tins of infant formula to mainland China. In Europe, you read about it that in the UK and in Germany, shopping shelves are empty. I hope they all buy it at Metro. But shelves are empty because people buy infant formula and ship it to China. And that's not because the manufacturers or the retailers want to do it. It is because the local consumers don't trust manufactured products in China. And that's an issue for all of us, for the retailers, for the manufacturers, for the suppliers of raw materials. We need to work to re-establish the trust, because otherwise I think there will be long-term issues for all the industries in the food business.
And apart from the food safety, and we also touch upon the regulation environment, what other challenges do you see? I mean, you know, we keep hearing the words, the best is yet to come, but it can't be all the rosy picture, otherwise we're changing our jobs today, right? How do you see that?
Well, obviously the most important is the customer. I mean, the behavior of customers and the increasing sophistication of the local demand, I think, is another challenge in China. So we call it a multi-channel approach for China, which I think is one of the recipes for success. No one can only rely on brick and mortar stores anymore. We all know about the growing e-commerce. We know about the m-commerce. Basically, customers willing and able to access merchandise and services from any place and at any time. So that poses a very big challenge to retailers as well. And soon you begin to understand that you are not a store operator anymore. You are a customer specialist who needs to understand what the customer wants and then tweak the offer and the way you offer towards the customer demand. And that's a big story. I think we could fill a whole evening about the format discussion, about the online solutions, deliveries, and so on and so forth, just to highlight a little bit.
Maybe from our side, I think one of the points that's important about China is innovation. And what is a bit of a challenge for Western companies is the speed of innovation. Because the West works a bit slower than China. When we want to launch a new product, we go through research, we do things, it takes forever. And in China, many things happen very quickly. And I think that's something that for a Western company, we will need to adapt to. But I also think for big Chinese companies, that is going to be one of the big challenges. You see so many little companies coming up, new companies, startups, that start to develop into new products, new ideas. And that's the amazing thing about China. You have one great idea and you can fill an entire factory, or actually a few factories, with one successful product. And that's something to really, yet the best is to come. But I think every player in the industry needs to be aware every day, and you really need to be upfront that you are part of the best yet to come, because things can change very quickly here.
The competition is very fierce.
So we'll open up to the audience now for questions. So if anybody has any questions, please stick your hand up. Don't be shy.
So first one, second, and third.
Heard in the presentation reference to opportunity to retail being grocery, e-commerce, and the third one. And I think the Metro representative mentioned e-commerce. So I was wondering whether the panelists can expand a little bit about the risk, the challenge posed by e-commerce. Because while both of you are in the food sector, in terms of the challenges we see, for example, in the white appliance, the household appliance sector, companies like Gourmet and Suning are now struggling to survive, if you will, their traditional business model. So I was wondering whether you can clarify a little bit how you view the challenges, the risks of e-commerce posed on your respective businesses. Thank you.
Tino, do you want to address that one?
Yeah. Well, as I mentioned, it's a challenge which we take from the customer's perspective. I think you need to be balanced in your approach. Neither will the e-commerce implementation be a pure success and an easy way, nor the optimization of the brick and mortar model. So in China, for example, you look at the logistics, you look at the back office of the retail operation. I think it's going to be more important in the years to come. Those companies who are able to increase productivity and who are able to master the supply chain back office in a state-of-the-art manner, they will also succeed, I think, with e-commerce solutions. But from a food company perspective, I mean, 70% of our business is still food. We believe that there is a room in China not only for the e-commerce or the delivery part, but also for the brick and mortar. And we all know the wet markets as a very good platform for Chinese consumers to satisfy their needs in terms of fresh food. And I do see an evolution on the government side to impose more regulations and also giving more level playing field to modern retailers in that space. So I believe that a balanced approach would do the trick in the long run.
Just to add to that, yes, the key here is diversification. The term multi-channel does mean approaching the audience from a number of different angles and going from online, m-commerce, s-commerce, and traditional bricks and mortar formats. But also the reason why these companies like Gourmet have struggled as well is because they're specialists, and the firms which diversify in their product offering tend to also succeed best across all channels. So that's one of the reasons why that you've seen specific companies that are failing and then companies that are succeeding. It's generally more about a broader product offering across a range of channels that are sort of integrated together. And I think that's the sort of the ideal, perfect thing for a retailer to target. So next question.
That was second.
Hi. Dr. Liu mentioned the stock income inequality in China. So I was thinking for luxury groups, say they can focus on the wealthy people in China. But for companies like Nestlé, which have a broad portfolio of products, it's hard to find a focus. So I'm just wondering, from Dr. Liu's perspective, is there any suggestions you can give for multinationals which have a broad portfolio of goods?
Right. To start with, I would first note that when you track the retail sales figure in China against disposable income, against average private consumption figures, against the actual GDP per head figures, you can see there's almost perfect correlations to each other. So one of the ways to be looking at this is to actually start a step back and start to look at what I was talking about earlier, the population growth, the income growth, so along that. Now, obviously, different companies operate with different target audiences. For the mass market ones, then you do want to be looking at the average disposable income. But for the luxury goods ones, you do want to start looking at the very high end. It doesn't have to be just top 20%. It can be 10% or even higher than that. But that said, is also important how you choose your location. We work with one of the leading luxury jewelry, and watch designer in the world, and when they were trying to look at locations, they were not just looking at the macro indicator, but rather they were also looking at other factors. For instance, for people who are very rich in the north part of China, in Inner Mongolia, where there are a lot of mines, they're very rich. Even though the average macro data is very good, but the truth is they will come to Beijing and shop. So in these incidents, you sometimes want to be looking at the city clusters and want to pick the city cluster, sort of the core of that city cluster, rather than certain cities within that cluster. So I would be arguing a combination of both these.
Benny, do you have anything to add to that in terms of addressing such inequality with the consumer goods?
Yeah, I think for us it's important to have a portfolio that really reaches all type of consumers, from being super premium, so being the very affluent consumers, and you look in our portfolios like Nespresso is a typical example, which is our global, very niche, high-end coffee system, but then really going down the pyramid to having also products that we position in price points that they are affordable for the mass, that they are affordable to go to the lower tier cities. So it's really having a pyramid of products from very affordable to premiumizing small products. And I think that's important. You also can premiumize a basic product like a water, where you can buy a San Pellegrino or a Perrier. But that in our industry will always be only, let's say, the top of the pyramid. It's really very big difference in price points.